Thank you so much for being a part of this event. We absolutely regret the delay. I think a couple of things setting up uh, but I think, yeah, we are good to go. So what I'll do is I'll just quickly introduce Wealth First in 2 to 3 minutes, and then I'll hand it over to Prasad. Prasad will have a brief introduction of our speaker today, and then we'll start with the session. Am I audible over there? All good?
Yeah, Gagan, you're good. Just speak about wealth first, and then later we'll have a small thing, do the first rounds up of introduction, and then followed by whatever need to be done. Okay.
Sounds great. Thank you so much. So yeah, Wealth First, as most of you all know, we have a lot of investors on panel. We have a couple of investors online as well. So yeah, Wealth First is a boutique financial advisory and wealth management firm built on a very strong foundation of private wealth management and institutional treasury. We have 4 chapters back in India. Um, Across the 4 chapters, we are managing close to $2 billion in financial assets across offices, HNIs, family offices, and institutional people. So, with a philosophy centered on disciplined investing, robust risk management, and long term wealth creation, Wealth First brings institutional quality thinking to private wealth management and corporate treasury solutions. So, one thing I would like to highlight about Wealth First, having an edge over other people in the industry is so it is basically investor specific, investor centric, right? While we hear this thing often by a lot of people, so one thing what we would like to iterate is yes, absolutely a very core organization in the terms of all the engagements are handled at partner level, and there has been zero iterations in the team since day one. So, given the expertise and given the kind of vintage we have in the industry, that gives us edge over so many other people in the industry. So, yeah, just to iterate, Wealth First combines deep market experience with a client-first approach to help investors navigate market and build substantial wealth. Um, so I'll hand it over to Prasad Guru for basically opening, collaborating people to introduce themselves, and then we can start off with Ramna's introduction. Thank you. I think you're on mute. Prasad, you're on the mute.
We'll just go with a round of introductions here, okay? And then we'll talk about presentation later.
Sorry. While introducing, what we'll do is basically because today we are going to talk uh, India opportunities and investments and everything. I just want to know whether each one of you are exposed to these markets or any experience that you have, whether it's good or bad. If you can just tell me or anything that you want to take home from here. This is what we want to understand more or something like that. If you can mention, that would be helpful for me to cover in the discussions. Okay. Yeah. Yeah. Madam, shall we start with you?
So I think you'll have to keep on reiterating in the middle because people online are not able to listen to that introduction.
Okay. Okay. Yeah,
Yeah.
I think that is the problem. Let us face it, Gagan. Yeah.
Okay.
మైక్ ఇచ్చేసేయండి అయిపోయింది మాట్లాడేటప్పుడు నో లెట్ ఇట్ బి ఇట్స్ ఓకే లెట్ ఇట్ బి బట్ దిస్ విల్ క్యాప్చర్ సంథింగ్ నో laptop would capture some of the sound no so not Yeah, it's okay.
This is Murli. This is Murli. This is Murli.
Just keep it there. Right. General listing. Thank you. Sure. Okay. Okay. Right. Good. Mhm. Understood. Okay. Okay. Sure. So the regulatory aspect of it you're talking. Regulatory aspect of it. Okay. Pressing issue. Understood. Right. You already invested mutual. Okay. Okay.
Okay.
Good. Anybody else? I think. Yeah, I think one more. Okay. Yeah. Anything? You have any experience in investments in India? Right. Right. Okay. Okay.
Guys, for people online, the summary is simple. So here, everyone is like 15 plus years of stay in United States. Lagan, can you hear us?
Yeah, yeah, loud and clear. Thank you.
Okay. Yeah. So major concern for us is like, where do we invest? How do we invest? And how do we repatriate the money from here to there, there to here? So a lot of people have broken knowledge, like bits and pieces, but not a lot. So here the session would be something like uh, answering these three big questions. What is the current market in India? How can we make use of that? And how can we just move the money in and out? Those would be the three big questions that this group would be interested in here. Okay. Okay. So thanks everyone. So far, it's good. Houseful. I can consider this houseful. Okay. Uh, and people drove from all the way from Chandler to here. Thank you very much. So Mr. Raman Gupta, he has been in the finance industry for like years. So he started his journey with SBI pretty much a long time ago, where he worked in forex department. At that time, it was only SBI was doing the money transactions in and out of India. Later, he joined in Reliance, and he grew up to treasurer for Mukesh Ambani, like one of the group treasurer. And he came out from the Reliance like in 2014-15. After that, he has founded this company, Wealth First. So focus is simple. He provides the awareness, and then after that, it's up to the individuals how do they come in. He has been certified risk manager. So one of his big pet peeve is like focus on risk management. So we don't go to the either side of the risk spectrum, but keep on tight leash, manage your money, and most importantly, the longer term goals. It's not short term gains, like not day trading and nothing. It's a longer term. So this Wealth First company, they do money management in the market, not on the real estate. So that would be one of the area they have not touched yet. We don't know how that will go in the future, right? So we share very personal relationship with Mr. Raman Gupta, right? So you might have heard the concept FIRE of late, very recently. Financial independence, retire early. And he doesn't believe in the retire early part, but the first part, financial independence, he is our coach. He was our coach, and I learned from him. Uh, so probably There's something for all of us to learn today. Okay, I'll hand it over to Ramgupta.
Thank you, Prasad. And thanks to everyone for taking time out on the weekend and then assembling here. Uh, yeah. So, Mike, yeah. Mhm. Okay, it's okay. Sorry, guys. No problem. I think some of you can move forward. If you can come to this side, it might be better. I can come. I can come. Yeah. Yeah, like Prasad introduced, basically, I spent almost 45 years in financial markets. I can say that. 1980, I started my journey in State Bank, and then later moved to corporate treasury. 20 years there, another 10 years now in the wealth management side is my exposure or experience, whatever I have it. Right. The purpose of getting together here is basically not to really do anything other than actually just to give the overview of what the India offers, right? Because I've been spending I mean, I'm here for last one month and staying with my daughter, and then I went to New Jersey for a family visit to one of my close relatives. That time when he has a big family, around 15 families are there for the big family. When we were having a get together, we were just talking about, obviously the things would come into this thing, and then talking about it. My observation was basically you people have come 10 years, 15 years back, 20 years back, or whatever it is. And then last touch with the, as far as whatever is happening in India is something what I believed when talking to those people. So at that point of time, then they said, we would like to know more about it. So we had a similar gathering a month back in New Jersey, around 25 family members and some of the friends and their kids and I think everybody was there. So there, the concept of actually talking about this came there while I was chatting with the people. So I thought, let me do the same thing here. I was just telling Prasad about the event in what happened in New Jersey. That time Prasad said, then why don't you come to New Phoenix? I said, if at all you want, that it is going to help any people there, then I have no problem in coming. So that is the context actually why I came here to talk to you people. So today we are going to just touch base upon what are the opportunities in India, what is happening there. Like many of you mentioned, you people are not really aware of exactly what is happening there or what are the opportunities. So we are going to talk more about the opportunities in India. Afterwards, it's left to you. Whether you want to explore, not explore is left to you people. But at the same time, knowing about our country is good for us, and then it is good for you people to talk about it also, right? Because lots of things are happening, and we'll go through that. I mean, I'll not give you a story. I'll give you everything only with the data, not with the any theory part of it or like a talk. Okay. So before getting into really the markets and other things, what I thought is better is basically to give you the uh, basic economic factors which are actually happening in India, so that we'll build it up from there is something what I thought is the right thing to do. And you have to excuse me for one thing. I'm going to talk only about the markets. I'm not going to talk anything about real estate because I don't know much about real estate, and I don't handle the cash part of it. These are the two things which I don't handle. Everything either it has to come to the bank and then go from the bank. Uh, that's where we operate in transparent manner. Nothing to do with the real estate, nothing to do with the cash. I am not exposed to that, so that's why I'm not going to be talking or anything about it without knowing. Okay, so before starting it, so I just want to ask you people one question. What do you think actually Indian stock market, right? All of you are know Indian stock market also is becoming very vibrant. Has given returns in the last say 25 years in US dollar terms. I'm not talking about rupee terms. I'm talking about in US dollar terms. Any guess? Percentage per annum. I'm talking about. Sorry. No, I'm talking about the returns. When you invest it, right? When you invest it, we expect a return, right? XRR or per annum returns. What could be the this thing in dollar terms?
Dear online
No, is it in
investors,
dollar
you
terms?
also have an option of unmuting yourself and contributing to the discussion. Thank you.
I'm talking about in dollar terms. I'm talking here. I will talk only in dollar terms. I'm not going to talk rupee terms because you people are here and then your earning, spending, everything is in dollars. Today I will convert everything rupee into dollar and then talk about it. So in dollar terms, I'm talking any wild guess. So need not be specific. 8% per annum. Okay, good guess. 15. Okay. Any other guess? How much US market has given in the last 25 years per annum? Okay. Last 25 years I'm talking about. That's what I'm saying. I'm talking about only the long term, real long term. Sorry, 8 to 12. Okay. Yeah, I think we are close, somewhere close. We'll just go through the numbers. Okay. So, like I said, India is a diversification theme that I'm going to talk about it, and then I'm going to talk about what is just the headline numbers, which is like indexes. All of you are aware, like S&Ps, Nasdaq, and other things like that. In India, also you have Nifty's and then BSE Sensex and other things. Then what are the other factors which are actually influencing and then happening there? Yeah. Like I said, I'm going to talk everything with the specifics of the economy. So this is the India versus United States. Today, I'm going to talk only between India and United States. How these two compare? How do we differentiate between these two economies? Is going to be the discussion. So basically, India GDP is 4.2 trillion, whereas US is 32 trillion. Is almost US is 8 times compared to India. And India is growing at 6.4%. This year it might be 7%, but US is growing at 2.3% per annum. This is as per the GDP is concerned, right? On the interest rate side, we talk about the policy rates, which is the central bank rates. India is 5.25, US is between 3.5 to 3.75. You are all familiar with the Fed funds. Similar to Fed funds, India repo rate is 5.25%, right? And India government borrows at 6.86%, 10-year in borrowing rate for the government, which is treasury, what we call here, right? In the US, it is 4.63%. And inflation in India is 4.6. In the US, it has gone up to 3.5 now. It used to be 1-2% previously, but now it has gone to 3.5%, right? And the last factor, anybody has any idea about the nominal GDP? Nominal GDP is, basically economics people and other people would know about it. Nominal GDP is nothing but your GDP plus inflation, right? So which is for India, it's 11%. For US, it is 5.8%. These are the basic economic factors. And as far as the stock market, this thing is concerned, it is a 75 trillion US market, and India is somewhere around 5 trillion. So it's almost 15 times, whereas GDP is only 8 times, whereas the stock market capitalization is 15 times. So US is growing slow. It's a big market, but India is small but growing much faster. That is the number. And here, what I wanted to just stress upon is we talk about interest rates, right? That 5.25%, 3.5%. So you can see that there is a difference of almost like a 2% per annum, right? Which is the narrowest now. It used to be, India used to be 7%, 8%, US used to be around 2%, 3% previously. So the interest rate differential is almost like 3 to 4% at any point of time if you take the long-term averages, right? So why I'm talking about this interest rate differential is all of us are concerned about rupee depreciation. Rupee depreciates, right? The reason for rupee depreciation is this one. There is no other factor. If rupee does not depreciate, if always rupee gives you 7% and US is 2%, people can do the arbitrage, right? You can borrow in India and then invest in the US and then make that 2%, 3%. Market won't give you that opportunity. At some point of time, these things are going to balance it out. So that's why if you see it, no, rupee is always depreciating, not because of anything else, not because of economy, weakness, exports, imports, all these things are very, newspaper stories. But the basic factor is interest rate differential. As long as the interest rate differential is there, we are going to be exchange rate is going to be, rupee is going to be depreciating against the dollar. Number one. Second thing is on the inflation front, it's 4.6%, 3.5%. All your interest rates are linked to these rates. In India, the normal, like I said, no, government borrows at 7%, whereas in US, it borrows at 4.63%. So all the interest rates are anchored towards the policy rates, whatever is happening. That's the one. And nominal GDP is one thing which I want to drive home the point for the audience is basically the 11% and 5.8% what this thing is there. All the in investments there are two segments, right? One is we call this fixed income, which is the bonds. Another one is the equity market, right? All of you are aware. Bonds are there, equity are there. Bonds are linked to interest rates. Bonds generally give the returns, per annum returns, which are linked to the interest rates. Whereas equity market in general has to deliver nominal GDP. In the long run, not every year it will give you 11%, 12%, but in the long run, it has to deliver the nominal GDP. These are the two factors which I want you people to note it. So nominal GDP is nothing but at which rate the country is growing. GDP plus inflation. That is where actually the country is growing. So because businesses are servicing the economy and then they're delivering the goods and the services to the economy, generally the markets also deliver returns which are commensurate with the nominal GDP. That is the reason we always talk about nominal GDP is 11%. So that's how the returns also would be there. And I ask you about what are the returns for India and then the US, right? So that you'll be able to see it there. Yeah. Other thing is basically the GDP. When I'm saying 6.4%, now India is you might be reading everywhere that India is the fastest growing country in the entire world. China used to be the leading in early 2000s and 2020, but now India is actually delivering highest growth in the world. And if you see the numbers in the last 10 years, India from 2.1 trillion, it has gone to 4.3 trillion, which has grown by 105%, whereas US has gone up by 66% in the last 10 years. And like that, any other country, if you take China, Germany, Italy, every other country, if you take, they're all much below the India's growth rate. That is the unique factor about India, is undoubtedly the fastest growing country in the world. Yeah, these are the numbers which we are talking about it, right? In the last 25 years, if we take the history, India has delivered 10.4% in dollar terms. And surprisingly, US only 6%. 6.1% for the S&P 500, whereas for the Indian, I'm talking about indexes. I'm not talking about anything else. Just like what we have in S&P, in India you have Nifty 500, which has delivered 10.4% per annum returns for the last 25 years if I take the history. But yes, if you see the recent periods where for 20 years it is 9.2%, and 15 years if I take the history it is 7.2%, 10 years is 11.4%, like that. But in the last 2 years, the market has not delivered much in the returns, whereas US has given the returns. That's why we are all shadowed by that number. The recent US market returns are fantastic, whereas the Indian market returns are not much. Even after taking the low performance in the last 2 years, it's 10.4%. Right? So that's what I want you to understand. Here, basically in the last few years, last 4 or 5 years, if you see US market, why it has given the returns is basically, you all know, it's the tech. Tech industry is something which is actually delivering fantastic returns. So if I take out that Mag 7, everybody talks about it, right? On the right-hand side, the returns are still comparable or lower than the Indian market in the last 3 years. So if I take out the Mag 7, in the last 10 years, S&P has given 11%, whereas India has given 11.4. In the 5 years, 11.6 and 10.2. They are all in dollar numbers, what I'm talking about. So let us not be perturbed by saying that US is the market which is giving our best returns or whatever. What I'm saying is India also delivered fantastic returns and it's delivering very good returns. This I'm talking about, like people have the concern about rupee depreciation and everything. After taking into consideration the rupee depreciation itself, these are all the dollar returns. Anything anything which is not understood here? Right. The other factor, which is very, very fundamental to investing, which actually I like to always stress upon is the wealth creation is wealth is created only in the long term, not in the short term. I think all of you people who are aware of it, right? Wealth means I'm talking about millions of dollars or whatever. It's created only after long term, not in the short term trading or whatever. There, every when in the long term, when you're investing it, we need to be very careful which are the assets which are going to perform in the long term much better than the this thing relatively, right? So if you look at it, I'm just for the sake of illustration, I'm putting it here. Anything only 1% difference, we say it is very small, but 1% difference in 25 years can make a 25% difference in the outcome. So if you are starting with 100, after 25 years, it becomes 1083 for 10%, but whereas at 11%, if it grows, it's 1359. So the 25% difference would be there in the outcome for just one person. So that is the power of compounding. That's the reason I think Einstein called it as the eighth wonder of the world. Right? So same thing if I put it into dollar terms, if somebody has invested 25 years back $10,000 in Nasdaq, in S&P or Nifty 500, that will be the outcome. Nasdaq would have been delivered around 100,000, S&P would have given around 50,000, whereas Nifty 500 would have given 1.7 lakhs because of the difference of the returns what we have seen previously. And this is the in the chart form what we have. If some same thing 25 years back, if somebody has invested $1, that would have become $5 in S&P 500. In Nasdaq, it would have become $7. And this I'm giving you the some of you people are exposed to mutual fund, you said, right? So HDFC FlexiCap is there for last 27 years. It is there. Okay. So HDFC Flexi has delivered $42,000. $1 has become $42,000 in the last 25 years. These are real-time data. While the index has given only 10.8%, these people could deliver something around 16-17% consecutively without much of a problem. And this, what I'm talking about is basically the previous discussion what I had is all the indexes I was talking about it, right? 10.2% and other things. But it's just not the indexes which actually are need to be looked into. If you dissect little below the indexes, Nifty 500, what we talk about is 500 stocks. But there, if you go slightly more deeper and then look at the segments which has given much higher returns than what the index has given. So that these are the pockets which I wanted to talk about it. So if you look at the broad market last 3 years, 5 years, and 10 years, which is 12.3, 1.6 like that, and these are the S&P and Nasdaq what it is there. If I go, like I said, the sub-segment of Nifty 500, look at only the capital markets. Like what you have is the tech here. There we have sub-segments like defense, capital markets, PSU banks, PSU, those type of sub-segments are there. Those markets have given, these are the returns what it has given. Capital markets in the last 3 years have given almost 50% return per annum. Right? This again, I'm telling you dollar terms. And in 5 years, it has given around 28%. Defense has given 47% and 50%. PSU banks have given 21 and 36. Power has given 20% in the last 5 years. Infrastructure has given something around 25%. So the index itself is giving you much better returns than the S&P. But if you go to the sub-segment, if you are venture sum and then look at the sub-segment, it can deliver you much better than the index returns itself. And in that, I think you people might be familiar, some of the people who are exposed to market, like in the segmentation, what we call in the Nifty 500 stocks, what we have. First 100 is called large cap, 101 to 250 we call mid cap, and then 251 to 500 we call it small cap. So if I take the sub-segments, small cap and mid cap delivered much better returns. While Nifty has given 12% in the last 3 years, small cap has given 20%, mid cap has given 21%. Like this. So while index itself is like I reiterate, index itself is rewarding. If you look at the sub-segment, it's much more rewarding and then can deliver you much better returns. And there are funds actually which have delivered much better returns. Also, there is one equity micro cap, and I think if you go sub-segment, that has given 30% in the last 3 years, and then last 5 years also around 28% per annum. This is what they have given. See, all these things are coming, why it is coming is, uh, see, stock market returns are nothing but how much the companies are going to make, right? If the companies are earning, that much gets converted into stock price appreciation. Without the earnings, nothing is going to happen. So India, because it's growing at 11%, many of the companies are able to grow their profits at between 15 to 20% also. So that is the reason the market is also giving you that much returns. So without the earnings, it is not going to happen. Again, I just wanted to dissect, within the Nifty 500. Nifty 500, if I take it, profit is growing around some 14% or 15%. These numbers, 14%, 15%. Whereas the small cap companies are growing at 29%, 27%, like that. So that's the reason I'm saying out of the 500, there are some companies which are growing at 30% per annum also. And there are some 160 companies which are growing above 25% per annum profits. And there are some 260 companies which are growing at 15%. When the companies are generating profit growth is there at between 15, 20, 25%, there is no other choice but for the market to give you that much returns. In the long run, not every time we will have it, but in the long run, that is what is going to be the returns which are going to be delivered in the market. Yeah, this is what we call as alpha. I think many people might be familiar with this alpha terminology. Alpha is nothing but if index is giving me say take S&P, like I said, some 7%, 8% return is given. If some other fund is able to generate more return than that, the difference between the index return and then the actual return is called alpha. So this is the alpha what I'm saying. I'll go on the Nifty 500. Small cap is given around 8%, mid cap is given 8.1. Like that, there are lots of opportunities within the segment itself, which can give you higher returns than the index which has given market. Right? Sorry? It is there. No. See, companies are categorized large cap, mid cap based on the market cap. So, like if you take Infosys, Wipro, and other things, they are in the large cap. Yeah. If you come to Tech Mahindra and other things, they are in the mid cap, like that. It's based on the market cap. Yeah. But Indian tech has not done great because they're all into services. They are not into products. So they are not. They are somewhere around 11 to 12% returns only. If you take the pure tech as a segment. And now I go to how deep it is now. I mean, how it is growing, the market-wise, capital markets it is growing. 20 years back, if I take, the entire market cap of the Indian market was $0.6 trillion, right? But in the last 20 years, now it has come to around $5 trillion. So it has grown almost like 15 times in the last 20 years. So in the last 5 years, it has become double. Now it's a 5 trillion market. And similarly, if you look at the mutual fund industry, it has grown by six times over the last past decade, from 13.8 trillion to basically 80 lakh crores. Now the mutual fund industry size is 80 lakh crores, which is growing like, between 15 to 20% per annum. Because unfortunately, what happens is in India, the penetration levels are very low. People who are adapting to investing in equity markets and the mutual funds is still very low compared to developed markets. In most of the developed markets, if I see, it is anywhere between 40 to 70% depending on the maturity of the people. But in India, it's still 15%. So as that percentage is growing, a lot of money is coming into Indian market, the domestic money, what I'm talking about. So investor base also now has become almost like a 13.1 crores. So almost like 10% of the population, they already are having a either a demat account or investment account into this. And on the flow side, just wanted to give you the brief about it. Previously, you might have heard all the FIS. FIS is a big buzzword, foreign institutional investors. They used to hold majority of the shares, majority of the Indian market. So if you see 10 years back in FI16, they are holding 20% of the Indian companies overall market cap, right? But you might have read in the recent times that they are selling in Indian market. In the last 2 years, they are exiting the Indian market because they want to invest in tech and other places, they are reducing it. So they are now their ratio is only 16% now. Whereas domestic institution, like I was mentioning, a lot of flows are coming into domestic market from the domestic investors. So that money is getting into the market, and then now domestic institutions hold around 35%, and mutual funds and other people have around 11.4%. Around 50% is held by the Indian retail and then institutional investors, which is 50% of the holding is there. The prominence of foreign institutional investors has come down drastically over the last few years. So if I put the numbers together, uh, what could be the money? Are you people heard the name called SIP? What I don't know what they call it here. In India, there is a very good retail product, systematic investment plan. So yeah, for people who are not aware of it, systematic investment plan is nothing but either monthly or quarterly or weekly, whatever you want to invest in the market, which is called as SIP. You know how much of money is getting collected every month only through the SIP route? Any wild guess? Leave alone one-time investments and other things. Monthly, how much money is coming only to the through the SIP route? Wild guess. Okay. Any other number? Sorry. $1 billion is what? 8,000 crores, 10,000 crores. Yeah, billion is 10,000. It is around 30,000 crores. 30,000 crores. 30,000 crores only through the systematic investment plan, which is, most of the employees, which actually they ask the bank to debit their account and then remit it out. Around 30,000 crores is coming, which was somewhere around 5 to 7,000 crores previously, but it's growing. Is coming in. Apart from that, there are other investments. So at an average, if I see the domestic investors are pouring anywhere between 50 to 60,000 crores per month into the market. So lot of savings are actually converted into the market, and that's why the ownership of local people is growing in the entire market segment. And this is on the right hand side. What we have is global mutual funds. What we call is how much global funds are actually emerging markets, how much actually is allocating to India. Not only the local people, even the global funds, having seen the market growing from 1 trillion to 5 trillion, now most of the emerging markets funds or whatever investing from the vanguards of the so all these people, they allocate some money to India also as an emerging market. Apart from that, whatever we saw that mutual funds and then direct equity, other things, similar to what we have SEC here, in India it's called SEBI, Securities and Exchange Board of India. They are reforming like mad in the last 10 years and then bringing out a lot of products into the market where REITs, I think most of you might be familiar here in US, right? REITs have been introduced in India now from 2017 onwards. So people who are actually looking at commercial property investments and then getting the rents or whatever it is, now they need not go to any builder and then do it. They just buy the REITs, they distribute as a statute, whatever they collect rent. The REITs are nothing but real estate investment trust. Whatever they rent, what they collect, they have to distribute to the investors. So in India, generally the returns on commercial properties rental return is somewhere around 6%, 6% per annum. So that much get distributed to the investors, and then because it's listed, whenever the appreciation is there, units also gets appreciation on that rates. And then there's a other things called alternate investment funds. So in India, for the investors, one is a mutual fund, which is a retail. For slightly more bigger ticket thing, there is something called PMS, Portfolio Management Services. And for 1 crore and above, it's called AIF. So AIF can invest in anything, debt, equity, real estate, or even the private equity also. All those things are possible through the AIF route. Now the current size is around 15.7 lakh crores. So what I'm trying to say is basically it is deepening in terms of the products also. It's a lot of deepening. Depth is actually happening there. Okay. Now this is as far as the markets are concerned. Now most of you people, when I mean, you people introduced to you, you were talking about currency depreciation and the repatriation. Let's now touch base upon that. Yeah. So this is the historical chart. Like I mentioned, the equity market here, rupee also I'm starting it. In 2001, it was somewhere around 46 rupees, right? Now it is 90, 97, 98 or whatever it is, right? But put that into perspective. What is the per annum depreciation? Per annum depreciation is 2.7%. Yes, we have all bogged down with the number. When we came to from India, it was 45 rupees. Now it's 100 rupees. But put the calculation and see how much per annum it is. It is around 2.7%. So what I'm trying to say is, don't get perturbed by the rupee depreciation. It is likely. It has happened. It's likely to happen. But only thing is, put that into your numbers. So if it is 3%. So anything in rupee -3 is your dollar return. As a just thumb rule, I'm saying. Whatever the returns in rupee you get, -3% per annum, if you take it out, it will be dollar returns. That's what I just wanted to say that. And you people are talking about repatriation issues and other things, right? I don't know how many of you people are familiar. There's something called NRE account, which actually no restrictions. Any amount you put it there, you get it back. There's no restrictions, no permission, nothing is required. And this is not taxed in India. And NRO account is something where all the rupee income, whatever you get, you put it there. And I don't know how many of you people are aware, but up to $1 million, you can remit it back every year. Are you people aware of it? NRO account. $1 million. Yes. You can get it back. Get it back to India. Sorry, US. Yes. Yes. NRE is no questions asked. Any amount you put there, you get it back. NRO account, everybody faces it. No, if I have income in India, what happens? How do I get it back? Up to $1 million. No need to go to Reserve Bank. Nothing. Just to give some forms are there. One or two forms are there. You give it to the bank. Bank itself can remit it out. Zero charges. Tax after paying tax. After tax. After paying the tax. No, no. No, what I'm saying is, NRO only thing is it has to be tax paid money. You produce saying that tax has been paid in this money, give a certificate, write a certificate, $1 million is remitted without asking any questions. That has been the recent development. Absolutely. Previously, it used to go to RBI, get permission. No, no. Now the banker, the guy sitting on the counter, he can take the declaration from you, certificate, and then remit out $1 million. No questions asked. That's why not many people are aware of it. So there are so many things which are happening, absolutely not aware of it. NRE, no questions asked. Even tax is not there. Even Indian income tax doesn't attract. Even NRE deposit, if you keep it in rupee, and which are around 7% or 8%, no tax paid in India. Entire 7%, 8%, you can get it back without any issue. Yeah. See, for US residents, that is a penalty. Globally, wherever you earn income, you have to pay tax here. Yeah. Yeah, you can take credit because of double taxation agreement. You can take credit and then show it off. That's nowadays it has become very easy. That's not a big deal at all. And now everything is digital also. It's not too much of a problem now. You get the certificates and everything digitally, so it's not a problem. Many of our investors do it. They sell real estate, put the money there, take it back. Our rental income is there, they take it back. Lots of things are happening. Absolutely no problem. Yeah. So that's what I'm saying. This is the current income. Whatever you have, you can do that. Fully repatriable, no limit, right? Capital funds, sale proceeds of assets, FD maturity, inherited assets, etc. Repatriable with a limit of up to $1 million per annum. Requires only tax credits, nothing else. Any other questions that you have on the rupee and then repatriation? Because I think that is the one question I think bothering most of you people. Correct. Correct. Yes. No, the last 25 years history been completely different. Actually, that HDFC MS FlexiCap, it has given 18% per annum returns. So if you take out the 3%, it is a 15%. So that's why I said $1 has become $42 compared to Nasdaq 7. Yes. One more declaration I want to make. Don't invest in mutual funds as long as you are in the US tax resident. No, there are PMS. There are PMS are there. PMS schemes are there which are actually replicate the same thing. There you don't have this PFIC. Mutual funds, one more thing. As a thumb rule, keep it. Don't invest in mutual funds as long as you are US tax residents. That gets attracted under PFIC, where you need to pay 40% tax, and that too every year. I know.
Sir, you might want to touch base on the gift city ones.
Yeah, I'll do that. So, as a thumb rule, don't invest in mutual funds. Yeah. No, it's not the question of India. It is a US problem. Not only India, globally, you can't invest in any mutual fund. Let me put it this way. Globally, anywhere, they call it as a collective investment structure. Globally, any mutual fund you invest, you pay punitive tax. It's a rule. They do not want money to go out of this thing. Or they do not want somebody else to be benefited out of it. Could be anything. But this is a very archaic rule. I don't know why they kept it, but keep in mind, we don't advise anybody to invest in mutual funds from US tax residents. A very small amount is okay. Below $10,000 is fine. Yeah, but yeah. Mutual, as long as mutual fund, it's issue. Yeah, don't do that. Yeah, whoever anybody says anything, don't do that. Okay. I know. Yeah. So now I'll tell you what is the remedy for that. When not, don't get caught up by saying that mutual funds we cannot invest, but there are many other vehicles which doesn't attract the PFIC. Okay. Anything on the repatriation side? Because that is a pressing problem. I know you people have it. Yeah. You have something? Yeah. So sorry. ETFs are there. Yeah. But ETF also is PFIC. That's what I'm saying. The word what they use in SEC is collective investment. So if somebody is collecting all the investments and then investing it, collective investment products, what they call. So that's what they actually is not eligible. REAT? REITs are not actually collective investments. Is a good question. It is a collective investment, but actually it goes into a trust and let me put it. That may not come under PFIC. I'll clarify that. That will not come under PFIC. Yeah.
So I think it's still come under PFICs.
ULIPs is a gray area. Because ULIP is sold as an insurance, right? No, ULIP is sold as an insurance. That's what I'm saying. If you go deeper and deeper, then people. No, that's what I'm saying. People have different opinions now. There is a split opinion. Whereas mutual fund, there's no split opinion. That is. Okay, REITs, I'll come back. Most probably it's not, but I think I'll check it once again. Yeah. 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 That's what all of us wish. But like Prasad was mentioning, I am a risk manager. I would never take that as a factor which I want to consider. I want to always consider that rupee is going to depreciate 3%, not 3%. I will say 5%, so that I'm just keeping that factor away. Yeah, because otherwise you'll be bothered. You'll be bothered. It is not happening. I mean, good question. I think 6 months back somebody called me from US. He told me this is before the Iran war or whatever it is. I think Modi, this thing was going on full swing or whatever. They said that time rupee was somewhere around 88. He said, can you give me a product where I'm going to bet that rupee is going to be 70, dollar is going to be 70. I said, why? No, I'm seeing it. It is 88, but it is going to appreciate and come to 70. So there are people who are thinking that way also now. But yeah. No, not betting markets, different opinion. No, now US is getting a lot of news about negative news and other things like that. Most people are talking about it. Yeah. Yeah. So now, anybody heard about the gift city? Yeah. This is a solution for all your problems. Gift city is a product which is we call it offshore product, right? Uh, which doesn't have any Indian taxation, which doesn't have any Indian regulation. Money can come in, no need to open NRI account, no need to open NRO account, no need to open anything else. Straight away put investments through the gift city vehicle, get back the money. They'll provide you the K1 certificate, whatever you have. No taxation, no Indian taxation. No need for PAN, no need for NRO, no need for NRE, right? So straight away put into gift city. They access all the Indian products, whatever the Indian products like mutual funds. They invest fund of funds, what they call. They invest in the Indian mutual funds only, gift city products, and then give you the same returns, but without having any problem with the PFIC. Yes, all the PMS, EIF, everything, all the products are available there. Okay, unrestricted repatriation, no questions asked anything, no domestic banking restrictions, unified regulatory framework. There is no SEBI, nothing like that. It's just a gift city authority, and then do it. And taxation is only in US. Whatever you need to pay, you'll be paying it. This is the latest development in the last 2 years where the gift city has come in. This purpose of this is not only for NRIs, even foreigners. In India, all this we were doing because we have a OCI or whatever it is, right? NRIs. Foreigners are not allowed to be invested in India. Now, foreigners also can invest through the gift city into India. So it is like it is developed like an offshore center like Dubai or Singapore, where money can come in, money can go without touching the Indian regulation. Yeah. Gift city is called a special economic zone. Only for investment purposes, they have kept it like that. Like a software development, this is actually done only for investment purposes. No, in like what you have the Robin Hoods of the world or whatever it is here. In Gift City, you have all the entities. So invest from there. Like Indian mutual fund, like HDFC Mutual Fund has set up an office in the Gift City. Motilal has set up an office. Aditya Birla has set up an office. All these people have set up an office in Gift City. Yes, it's in near Ahmedabad. They have a some 2,000-acre area which is earmarked as a gift city. It is government statute. That's all. There is no government per se. There is it's all a facility created. People come and then people establish office, work and then go. That's all. They have to be registered with the gift city. Gift city authority is there. They have to physically be there and then register with the gift city. Hmm. Yeah, yeah, yeah. Hmm. Correct. Yes. Yes. Right. Dollar. US only. It's all for US. Yeah, like opening a Robinhood account or whatever it's something like that. Yes, yes. Only cavities, minimum investment is 150,000. Minimum 150,000. $150,000. Yeah. It's not a retail product. Minimum investment is 150,000. No. But see, there are products, there are lock-in products and not lock-in products. So there are so many things are there. We have to pick and choose. We have to pick and choose. Anybody can do that. LLC can be done that. That's what I'm saying. Not only for NRIs, now foreigners can also do it. So foreign entities and anybody can do it. You decide when you want to get it out. Yeah, yeah. Like I said, Robinhood, T plus two money is in your account. Not on the T same day it won't come, but T plus two. In India, the T plus two is the very standard practice. See, as long as the equity investment products are concerned, nobody can assure you any return. Yeah, that's what I'm saying. All these funds, whatever equity products are there, like mutual funds, other thing, everybody is there. I'll show you that. Gagan, Gagan,
Yeah, 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 yeah.
you have that Gift City outbound, inbound product page.
I do.
Yeah, can you just blow it up after a minute once I'm
Yeah,
done with this?
yeah.
Yeah, it will
Meanwhile,
show you.
yeah, I put it up. Meanwhile, you continue.
Yeah, there are no US tax, whatever is there. No, no, Gift City, there is no Indian tax. Right, taxable in the US. See, as long as you're in no, no, it's not 40%. Then you need to move to Cayman Islands. Cayman Islands, right? Yeah. So as long as in the US, you can't escape from this thing. Yeah. No, that's right. The Gift City doesn't tax in, right? One second, Gagan. Just let me finish off and then I will show it. Show it, no problem.
Is my screen visible?
Blow it up. Blow it up.
Is my screen visible?
Yes.
Okay. Just a caveat, this might be a bit dated. So this the returns are as on March 26.
Yeah, yeah. Just go to the table only, no? Yeah, these are some of the products what we listed. No, go up only, Gagan. Number one से दिखा देना. Yeah. See, again, you are talking about, right? Last 1 year has been bad for the Indian market, so it's a negative. But after taking the negative also into consideration, 3 years 12.7, 5 years 12.7, since inception 14%, something like that. Yeah, come down. HDFC is there, Motilal. Yeah, some of them actually recently started, so they don't have much history there. Yeah,
So essentially, this is just an compilation of what we have done on the inbound funds. So
correct.
within this category, we have our own set of recommendations where we want.
Gagan, you are not audible.
Okay, not audible.
Yeah, 1 second. Let me allow that. Yeah, Gagan, you can speak.
Yeah, is it audible in the room?
Yes.
Great. So just to give a caveat, so whatever we are showing you on screen is gift inbound, and this is the entire plate or universe of what we have in India. So we are just showing you whatever optionalities are available with respect to gift. Within this thing, Wealth First has its own recommendations with what we want to do at this point in time. So this is just an overall picture what we are sharing with you.
Yeah, these are some of the products. But what we do is, as a wealth manager role, what we do is we filter all these products, and then our role is actually first to map your finances, and then see what are the products which are suitable for you with respect to taxation, with respect to your wealth creation ability, and then identify the funds which need to be invested, and then facilitate the transaction. That's what actually we do as a wealth first. We need not have it. We know, and we are only what we call the advisors. So advisors need not have it. We work with them. Correct. Everybody is there. Like I said, HDFC is there, ABSL, Aditya Birla is there, Motilal is there. Everybody has now opened it. In the last 1 year, everybody has opened it. India money also can be invested. Yeah, but you need to convert into dollar and then remit it. But then why do you want to do that? Indian money you can invest in India itself, right? You can remit. It- Yeah, right, right. No, then what I suggest is liquidate, take the money into dollars into your US account and then invest it. Investing in, again, because you have to convert into dollar anyhow. So when you are converting to dollar, why the hell you want to keep it again the India relationship? Bring it here only and then invest it. Then let it be there, no? Why are you bothered? Convert that into PMS. Don't keep it in mutual funds. Convert into PMS. That's what we do for all the NRI investors. I understand that. Don't do that. That's what I'm saying. I mean, you know that it's a mistake. Liquidate it without much of a delay and then convert into PMS. That's not a problem. On the appreciation. If at all there is appreciation. Yes. Yes. See, you invested $10, right? It has become $11. You're not taking the profit, but on $1 you have to pay tax. Sorry, you don't pay. No, only when you redeem it, you can adjust all these things. No, PFIC is always a headache, and it's too much of a headache. PFIC. Yeah, yeah, yeah. Whereas actually, if you are in PMS or anything, you would have paid only 15%. That's something. Yeah. No, that is I mean, people have to accept it. Sometimes they want to do. Yeah. Okay. No, you're talking about the broking account. You're talking about the investment account. Investment account means basically like you're saying mutual funds are there, like PMS is there. If you invest in the same mutual fund or PMS through the gift city, it doesn't come under PFIC. If you open a broking account, you can't open a broking account in Motilal and then trade. You can't do that. If it's a gift city, if you have opened with a gift city Motilal, it's fine. Gift city is a separate entity. It's called Motilal only, but Motilal gift city entity or something name is there. Yeah. But you can't, that's what I'm saying. There, the minimum investment is 150,000. For each investment, you need to make 150,000 minimum. Yeah. Yeah. Okay. Any other questions? Yeah. Just I want to summarize. India remains one of the world's fastest growing economies. Historically, India delivered better USD returns. Sector investing is definitely outperformed the general market. Gift City provides very good facility, USD based investing. Okay. And India's success story is accessible. So don't be worried about what can be done. It's as good as dealing in US. Most of it is digitalized now. There will be some signature drama would be there, but most of the things you can access at any point of time and then see what is happening there. So that's not a problem at all. Overall, what I'm saying is, I'm not saying do everything there in India. I'm saying all of you to consider as a diversification. You are mostly concentrated in the US market, but as a diversification story, India would definitely work better. The problem is, all of you are aware, US market is actually become very tech heavy. Any small correction in the tech could actually bring down the drastically. Whereas in India, there is no tech. It's all manufacturing and services. So there is no depth for that. And India is growing at 11%. Getting 11-12% rupee returns is a no-brainer. So what I'm saying is, being Indians, don't miss this opportunity. Whatever is happening in the last 10 years has been fantastic and growing very fast. I don't see the growth rate coming down at all. I think it will go up to 7%, 8%, but it will never come down because the consumption story has just started there. Right? So being Indians, we should not miss this, what we call the decadal opportunity. Because every country goes through this, one big jump, which we call the J curve. So we are at the cusp of the J curve now. Don't miss the opportunity. That's what is my, yeah.
Political changes, things like that happening. Do you still foresee that this momentum is going to go, or
I'm telling you, economy has become so big now. No political system. Even if you put a donkey there, it will run. Did anything happen to a US market in the last 2 years? Whatever. What I'm saying is, no, I'm saying economy has become really, really completely devoid of all these people. He said, "ठीक है, आने दो, जो भी आएगा आने दो." No, it's not the question of, like you were asking, no, the small cap, mid caps. You know what is the reason? One big reason is GST. All the companies which were small and mid cap, they were all in the unorganized sector. Once the GST is introduced, they said there's no incentive for being in the unorganized. Let me be coming to the capital markets and then be public. So these are the guys which are growing at 25%, 30% growth per annum. So they're all coming into the market now. If you see every month, there are some at least 15 to 20 companies which are getting listed. Because everybody wants to be there in the market now. It is just catching up. I think this momentum is just started. It's not going to stop. That is what is my belief. Okay. Yeah. Any questions on this one? This one? And what's the time? It's 5? 4:40. And 20 minutes.
so? Yeah. So one on that, maybe you might have the. So what we are also looking for is, because majority of this crowd is the. If we are talking about long-term investment, like next 20 years, 25 years, I don't think we will be able to survive by then. I'm just like.
Understood.
Some tips out there, investing in India and all of that. That will help us.
See, again, I go back to my this thing. In the US markets, in the equity market, don't believe anybody who is assuring you any return. Because nobody knows what happens, right? But look at the data. Look at the data. Like I'm reiterating, if the country is growing at 11%, companies are growing at 15%, getting 10-15% return is not a problem at all. Only thing is, it's not in the straight line. Every year you will not get that. But in Indian market, I can show you the data. If I take any 3-year rolling returns, it never gave negative returns. So anywhere between time horizon I'm talking about, if you are investing in Indian equity market, not only Indian equity market, any equity market, at least keep a horizon between 3 to 5 years. Don't invest money for the sake of 1 year or 6 months or whatever. Unless you do not want to touch the capital for at least 3 to 5 years, only that money should go into equity.
Yeah.
Otherwise, don't even venture into that.
Yeah, because these just.
Correct. Absolutely. Yeah. Yeah. There actually, I'll go back and then show you that number. It's a good point you brought in. This one, right? See, I don't know what you are seeing it here as a, again, as a risk guy or a guy who plays with the numbers. This is a long-term average, right? And then everywhere it is around 10%, except this period of 15 years, everywhere is around 10%, right? When it is 1.7% for the last 1 year and then 2 year to 6.5%, what is the probability of next 2 years delivering 10%? Is it low or high? It's a fantastic opportunity for particularly US-based investors. I am saying that is, again, it's a good point you got in. September 2024 was a market peak in India. We had 26,500 index in Nifty if I take it. Today it's around 24,000. So 2,500 points, it is lower than what we saw in September 2024. So it is actually 10% lower than what it was 2 years back. Number one. Number two, rupee, which used to be 86, now it's 96.
Yeah. I think that's the
So what I'm saying is, it is available at 20% discount compared to September 2024. Right? So my personal opinion, again, I'm saying I'm not going to assure you or say whatever it is. I'm telling you it's a compelling opportunity. For anybody who is looking from the outside market, it's a compelling opportunity where you are getting a 20% discount to them what it was available 2 years back.
Yeah, but something is
Right. That's what. Only two suggestions I have it. Don't invest in mutual funds. Right? If it is Indian money, let it be in India. Don't bring back to US and then again invest it unless you want to do that. Like he was mentioning, you bring back to your account here and then invest through the gift city. Otherwise, in India, you invest in through the PMS route. Yeah. PMS route is the where you pay only the 15% tax, whatever you need to pay with the double taxation. We need to ask for it when we are investing it. Then obviously, it's an account type. Yeah, it's an investment vehicle. Like mutual fund, you know what are mutual funds, right? Like that, there are 400 PMS managers out there who actually do that. Yeah, PMS is nothing but they open a demat account in your name and then buy the shares and in your name only. Only thing is they would be doing their own research and then buying it instead of you applying your mind. Yes. No, actually, 50 lakh is not many people are accepting 50 lakhs. all good guys are now saying no, unless it's the 1 crore, then I do not want to open my account. Something like that they have become now. Yeah, yeah, that problem is there. 50 lakhs. Yeah, now that with the depreciation, now 50 lakhs is now it is small amount, right? Yeah, $50,000 now. 50,000, yeah. Okay. So I hope I answered your question. Yeah, saying that, yeah. 3 to 5 years is a fantastic period where you can be highest probability of getting the 15%. Okay, now I want to go back to a little this thing. Prasad knows about my journey, what I have done or whatever it is. I am a strong believer in a philosophy called fulfilled life. I just because Prasad knows most of how I approach my this thing. Anybody wants to know about this FCNR? We think you might be hearing about it, right?
maybe so.
Okay. FCNR is nothing but it's a free money offered by, let me put it, it's a free money offered by the government of India for NRIs, for the love and affection of on NRIs. It's a free money. It's a free money. So let's keep tax aside. uh, you need to immediately shift to Cayman Islands. There is no tax in India. Everything is in US. If you do not want to pay, it's left to you. Yes. Yeah. Now there are a lot of discussion actually happening through the 6% can be enhanced to 11%, 12% or whatever it is, right? That is a discussion people have it. So what we call is leveraged fixed deposit. It is nothing but if you put 100,000, bank gives you 900,000 loan, puts a 1 million deposit, and then they give you the interest. Yeah. See, even that time basically 6% is the highest rate. Nobody in the world, anybody gives 6% for dollar, right? So in most of the places, you can borrow even at 5%. So you borrow at 5%, then lend it at 6%. You give a deposit at 6%. That's the arbitrage people are doing it. But again, I don't suggest for US-based investors because whatever you get interest on 1 million, you need to pay tax. And whatever you pay interest, you will not get adjustment. So don't even attempt that leverage. If at all you want to do that at 6%, do it. But don't get into the trap of that leverage one because nobody would tell you that this is a tax problem. You're getting my point, I think, right? On the entire 100,000 deposit you keep, 900,000 that fellow would lend you. Make it a 1 million deposit. On 1 million deposit, you get 6%, which is $60,000. On $60,000, you pay tax, right? But you would be collecting 50,000 as an interest. On that, you will not get the tax credit. I think I hope I'm making sense. Okay. Again, same example. 100,000 is what you want to invest in the FCNRB, okay, right? So you put deposit, you get $6,000 per annum, right? 6%. Yeah. Simple, plain vanilla. Banks would offer you saying that no, you do the leverage deposit, where they say you put only 100,000, I'll give you 900,000 as loan at 5.25%, right? And then make a deposit of 1 million. 100,000 is yours, 900,000 is money. So 1 million you put a deposit at 6%. So now you get 60,000 interest, right? And then you pay, 5.25% means on 900,000, you pay something around 50,000 as a 50,000 as a interest, yeah, on the loan. Net to net, you will be left with 10,000. But the problem is you will be paying tax on the entire 60,000. No, fixed is agreeing. They're going fixed. They do not want to take the risk. Everything is fixed. అది ఇన్సూరెన్స్ అక్కర్లేదు మా ఇండియా ఎప్పుడు డిఫాల్ట్ చేయదు అది మాత్రం మీరు పెట్టుకోండి ఎప్పుడు చేయదు అది అంటే మీరు హిస్టారికల్ తీసుకుని ప్రీ ఇండిపెండెన్స్ పోస్ట్ ఇండిపెండెన్స్ నెవర్ డిఫాల్టెడ్ సో ఫర్గెట్ అబౌట్ ఇట్ okay so but again I'm cautioning you don't I'm cautioning you don't fall into the trap of this leverage thing because nobody will tell you about the tax issue. And the other problem is entire your credit limit gets blocked for 900,000 for no reason of it. But for $5,000-10,000, why do you want to do that? So don't get into that. Yeah, but problem is nobody talks it. That's the problem. Nobody talks about it. Yeah, many people have done it. See, this actually works like you said, no? For people in Singapore and then Dubai, it works because there's no tax. Yeah. They people are doing it. They already got $56 billion. Yeah. Banks are lending and then giving it. $56 billion already they got, which was supposed to close on September 30th. They preponed it and saying August 31st. Afterwards, he is not taking it. They were expecting 30-40 billion. They got 56 billion. Yeah. Now it's only August 31st. They preponed it. Yeah. That's what we do. Right? That's what we do. No, I mean the approach. What we do is we generally, if somebody says I have a certain amount of money I want to invest, I generally don't suggest anything unless I try to understand where you are, what is your objective, what is your tax status, everything we map it and then see what are the products which are suitable to you and then give it to you. That's what we do.
So
All those things we incorporate when we understand you. Without you telling us, we will not do unless we understand you, because we want to do a little bit of value addition. Because see, whatever you are coming, it's your opinion, but it has to be to go. Hey, YouTube videos, what for what. You know what for the YouTube videos are created, right?
so these are all so
Yeah, yeah.
what delivery.
Okay. Gagan,
Yes.
can you just put that slide of wealth first का जो recommended funds का?
On
It's there
the
in the client
MF
PPT.
MF side.
No, the wealth first का client PPT में हम लोग जो last slide दिखाते हैं ना, what is the wealth first, how wealth first recommended funds are delivered.
Okay, just a second.
Vaishu, I think you should have access to that. I'll show you that. Yeah.
I'll
Meanwhile,
try on.
just translation from investments and other things. This is something which is actually very close to my heart. Prasad knows about it. I mean, all of us are coming from, either lower background, middle income background, or whatever it is, right? I mean, all of us have challenges, right? So what do we do? What is this thing? When do you have the fulfilled life or whatever it is? Have you thought about it, that the first sentence, what is the amount of wealth that allows you to live the life you want without financial anxiety? Did any of you people worked on it? Sorry? No, it has to be based by the numbers. It has to be based by the numbers, right? No, it's a very big statement. I'm telling you, it's not that easy. Not many people can put the number also. I can tell you that. Yeah, right. As long as it could be 7, it could be 10, it could be 20. I mean, so what I'm saying is that has three components. I don't know whether you really look at it. One is actually what we call the security corpus, where family, I'm not bothered about family say expenditure or whatever it is. And one more component what I want is the freedom corpus. See, all of us would have ambitions like, yeah, I want to get out of the drudgery, this, that, another thing, want to do something on my own or whatever. Whether you are able to provide for the risk capital of that to pursue what you want to pursue, right? The third one is all of us cherish, right? We want to do something, give it away or give it back or whatever. It's not every human being has it. Whether we have that ability, whether we have that will to do it or not is something, it comes at different points of life for two different people, right? Create some corpus for that so that you have a very good clarity on, yes, this money is actually I created only for this purpose. So let me spend it. Till you do that, earmark that, you will never do that. Because like you said, no, it's never ending. Right. Like what you have it here, we have a fantastic nomination facility without no questions asked. Everything gets started to your kid's name. Yeah. Like what you people do it here. Every investment comes with a nomination facility by default. So sorry. Yeah. India there's no problem. You can do that. No. One more thing I'll tell you. Don't do that. Don't do that because in the US it comes under the taxation asset. What do you call it? Inheritance tax. In India you don't have inheritance tax. Yeah. But for all the financial investments, there is no will required. Nomination is the easiest without much, except they ask you only death certificate and then one affidavit. That's it. Correct. Yeah. Yeah, yeah. If you have a trust, then it's fine. No, no, nomination is personal. Yeah. If you don't have a will, if you don't have a nomination, then all those things would come into picture. That Hindu Succession Act and all those things would come into picture. No, that's what I'm saying. Where you don't have the will, where you don't have the nomination, particularly real estate, it comes with the family certificate, other things. But financial investments, nomination is the best. Like only thing is risk is if nominee also is not available, what happens? That time actually that will be the safest. Yeah. Real estate nominee లేదమ్మా ఇండియాలో అయితే లేదు. She might have already planted also. Right? Yeah, this is one thing. And then as part of this, what we do is actually we tied up with some of the NGOs who are willing to look at, some of the, there also we screen some of the NGOs and then see who are the guys who are actually using the money for the productive purposes is something what we do. Actually, I'm in the board of this NGO also. And I spend a lot of time with this NGO for this thing. And Prasad, like people, they support it for the last 4 or 5 years. One of the programs what I support is actually the orphan education where this Balavyas is a NGO which identifies they do a lot of work in the villages. They identify the village orphans in the village and then adopt them and then support the families for orphan education. Those type of things we do for some of the people who want to do. Because being away, you may not be actually having access to the places where money gets utilized properly, right? So some of these things, if at all you have any concerns, then you can approach us and then do with it because we actually do that. Yes. These are all FCA. No, all those due diligence we do. Yeah. The accounts also we look at it, then we audit all those things and then see whether we speak to the beneficiaries and everything, then we identify this. Yeah, that's all from my side. And thank you. Yeah. So
Yeah, you wanted to go through the wealth first recommendation methodology at the same time. Is this the slide that you are wanting to show?
yeah, I put it.
Is the
Yes.
screen visible?
Yes.
Hmm.
Yeah, this is what we do because I mean, if I'm telling you the mutual fund things what we are doing it because most of the domestic investors mutual fund is the best route for them to do because of tax planning. So there are 45 mutual fund houses and then some 500, 600 schemes are there. Which one to be identified? Well, that's what we do the short list, and this is the summary of that what we have done. So whatever the we have recommended indexes versus the Nifty 50, what is given. Year wise, these are the returns which actually we are delivered. Yeah. Vaishu is there?
Yeah, by show is here.
Yeah, I'm here.
In the client PPT, there is one more slide now, Gagan.
I'll share a screenshot of it.
Yeah.
Yeah.
The business model what we operate is in India. It's very difficult to get money out of the advisory. Yeah, advisory is still a concept which actually is not really where here if you engage any wealth manager, then you pay 1%, 0.5% or whatever. In India, that's still not in progress. So what we do is we actually become distributors to the products. If the money is invested through us, part of the fund management fee what they collect, they pay it to us. So we don't charge the clients. 90% of the clients we don't charge unless the corpus goes to some 15, 20 crores. There we become a retailer and become an advisor. But for all retail people, we say you invest through us, we get paid by the product producer. That's what we do. No, no. Everything in your name only. Only thing is we identify which are the funds you need to invest it. That's how we do it. Whether it is a PMS, whether it's AIF or GIFT City, everything works like that only. Yeah. Because India, that advisory doesn't work. Very, very difficult.
But
Yeah,
you're
everybody
able to.
charges it. No, in India, the generally the fund management fee is something, I'm talking about
Yeah,
equity.
just a
It
second.
starts anywhere between 1.3% to 2% per annum. And all the returns, whatever I've shown, they're all after the charges, after the charges. And one more thing is, I know you might be reading about, this index funds, active funds, and other things, right? In US, I think you might have heard about that Warren Buffett versus hedge fund manager bets, another thing, where no manager is able to deliver better than the index returns in the long run. Whereas in India, it's the other way. Most of the active funds are able to deliver better returns than the index returns, because still, there's a small information arbitrage, these, that, other thing is there. So the active fund managers are able to deliver at least anywhere between 2 to 5% per annum better returns than the index funds. Yeah. But you are able to get it?
I'm
Yeah,
putting
I
it
just
up.
shared it with
Just
Gagan.
let me
He's
know.
putting it up.
Is this the one what you wanting to highlight?
Yes, 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 yes. Yeah. Yeah, this is a well first recommended performance comparison. According to each category, we have it, right? So So we provide the recommended funds. What we provide generally the giving around 2 to 3% better returns than the market returns. Yeah, this is exactly what we wanted to see. We have a minimum investment requirements of 50 lakhs. Okay. Anything else? Any other questions if you want? Then I can address, and then we can, because now it's almost time what is coming to taxation, currency, markets, no real estate, definitely. Yeah, real estate, there are two things which I don't like it, because you people have experience. There's a lot of cash involved in the real estate. When you buy, it can go through the check route, but when it sell, without cash, it doesn't come. So then it becomes a big issue. Right? We don't handle it. And then, I'm just giving you the overall brief. The constructed property in Hyderabad at least has not delivered returns, much returns. Hardly 5 to 7. Constructed property I'm talking about. Yes, land has delivered very good returns depending upon which location you are buying it, but constructed properties have not delivered returns. So whoever comes to me for commercial real estate, I say, boss, put it in REITs and forget about it. They're very transparent. You can get out anytime. No hassle of engaging a tenant, getting them to the repairs and other things. So just buy the REITs and then forget about it. And I am a strong believer. Not even a single paisa of my net worth is in real estate. Everything is in markets only. So that's how we do it. Yeah. Thank you once again. Yeah. Hope it helped, right? Yes.
Thank you, Monica. Okay. Thanks, all of you. Staying so patiently. ఫుడ్ ఉంది అందరూ తినండి వెళ్ళిపోవద్దు. Yeah. So, okay, if any group questions, I mean, like, if everybody can benefit out of it, please ask now. Otherwise, also, please keep talking in groups or with him and anything. Okay. So, just thank you, Monica, for coming all the way. So, 6 hour journey from Boston to here. He extended 2 weeks to going back to India and then came here. That's sorry, I bothered him. Okay. So a lot of personal conversation and like a lot of these questions that I talked to him, like what do we do, how do we do, and all. Um, so he's my coach. Personally, he's our coach, myself and Shivani, and he had that beating for us also for sure. So, so I'll tell the we will tell my our story. Okay. So we had our home in India and we sold off in 2022. Hazel. I'm still fighting with IT department in India for all the returns or whatever they're saying. It's like, and then I decided, okay, I'm not going to do anything on paper, put it, power of attorneys and all. I decided on the day. I took the money, all white money, no black money. I know Pankaj has a lot of it, so I converted all of it, and Moigaru, he created one account for me, and the fund is managed by the company. It is doing good. So I did around 70. I can speak the numbers. It went two and a half, and it came down a little with this whatever the last 2 years, but it is not bad. It is not bad, and whatever I go through financial advisor here also, for example, but I'm happy. I'm happy what I'm doing in India. But I always have the question like, do it here, do it there, move money from here to there, and all those things. That those parts I have not figured out. One big question like Washington. I'm not going to look at 25 years. Myself and Gopi and we all have our own fundamentals that okay, we enjoy our money. Okay, okay. Jokes apart, but yeah, you all have your own preferences. This is just information. We right? I think I learned few things for sure. I think Pankaj's question will be answered for sure. So the reads. So a lot of things I learned today for sure. Even after I am talking to him for like years and years, I learned some things. So let me know. I think I collected your email IDs just to give his and like staff so that they will send you communication protocol. After that, that's up to you. Okay. Thank you very much. Kasada. చెప్పా కదా 45% is Chaitanya's retirement number. It started at 35. Okay, I'm still I'm 46 now. Oh, 7 million. Oh, that's 7 million. Oh, yeah. So I don't do. I have a PhD MBA guy who is sitting in Chicago. He does the math for us, and he recently told 6 million. So I'm sticking to that number. Oh yeah, done. Okay, next meeting about this topic will be happening here. Okay, so we all will take a collective decision. Where do we retire? Yeah, people on the online, thank you very much, and we will Gagan. Uh,
Yes.
yeah. So we are good here, and thank you everyone who have joined online too.
Yeah, I
Okay,
think most of
Vaishnavi
the
and
guests
Gagan,
just
thank you for
left a
organizing.
couple of minutes back.
Okay, okay, thank you. Have a good day.
Thank you so much. Yeah,
Thank
I'm
you. Thank you.
ending the call for everybody. Thank you.
Yeah, thank you.